Okay, live here, live there. We're live everywhere. Good afternoon, everyone. This is Roman Share with this week's BIS update. BIS Buy, Invest, Sell weekly update. Fastest 20 minutes in real estate. Two things happened today that every LA buyer needs to understand. Number one, Kevin Warsh became the new Fed chair this morning. And number two, rates hit a high of 6.62 on the 30-year fix, an 8-month high. This rate move, what Warsh actually changes LA condo sales at a 20-year low, what California interest rates are doing, and what that crisis means if you're buying a home right now. And Liana takes us through a tour of West Hollywood that's having quite a moment. Ready? Let's go. But first, I want to take you through our latest flip. Welcome to 7941 Sycamore. Now, this is a property we bought just a few months ago, actually 3 months ago. It took about 2 months to renovate, and then we had a little bit of issues in terms of getting it onto the market, but everything looks beautiful. The house has a brand new roof. We spent about $70,000 altogether on this home. Pictures look fantastic. And I'm hoping that we sell this one pretty fast. I'm very proud of what our team did here on this one. There we go. Floor plan is really comfortable. It is a 4-bedroom, and then we added a beautiful outdoor patio. It was really bare, and we fully furnished it. As you can see here, the renovation took place over the course of 2 months. Subfloor changes, plumbing changes, electrical. This was a pretty detailed renovation. The property sits on nearly an acre of land. We anticipate this one going real quick. It's got an outdoor man cave, shed, work area for whoever wants that. And you see a lot of land. Workshop here, as we call it. Really excited about this one. This one's coming to market this weekend, hoping it goes quickly. So 4-bedroom, 2-bath, plus a really big outdoor patio area. Really excited about this. If you're interested in getting involved in projects like this that we do in Jacksonville, Florida, or here in Los Angeles, definitely reach out. Let's talk. Let's get into our content for this week. Day one for Warsh, okay, and as day one occurs and Powell is out, our rates hit an all-time high, or not all-time high, but an 8-month high, all-time high this year. Bond market is really calling the shots here. The rates jumped to 6.62 this morning because Treasury yields, they ripped after the Trump G summit ended yesterday. The Fed chair didn't move that. The bonds did. So he got confirmed 2 days ago in a 54 to 45 Senate vote. It's the most divisive Fed chair summit on record. And he was sworn in today. Now, Powell stays on as governor. It's the first ex-chair to do that since 1948. So that's pretty different. Now, rates today, like I said, they're the highest. The yield jumped 10 bips, basis points as we call them, just from yesterday. Now, people are saying, okay, we're going to get lower rates now that this guy's in. Don't expect that right away. April CPI numbers came in and they accelerated. Inflation accelerated to 3.8% from 2.4 in February. It really reduces the possibility of a near-term rate cut. Really goes down significantly based on that. But we are all hopeful that with him coming in and less friction between Trump and the Fed chair, with hopefully Iran coming to a close in the near term, that we're going to see those rates come down to where they were before Iran started, which was below 6%. All right. LA condos have really cooled off. Now, first-time home buyers are getting hit from all three sides. You got rates, you got HOA fees, you got insurances. Condos used to be the on-ramp for a first-time home buyer to get into the housing game. Right now, it looks like the toll booth. That's how bad it is. The number of LA condo units sold in the first 2 months of this year was the lowest in over 20 years. Okay. Median condo price also went down about 5% year over year. Now, Homes.com data confirms exactly this softness. LA condo active listings went up 18% year over year. Prices are off, like I said, 5%. Now, townhome sales, however, meanwhile, they jumped up 21% year over year. The sales number went up on townhouses. Buyers are shifting to townhouses when these condos don't pencil. Now, why is this happening? Condos are struggling specifically because of, number one, HOA fees. They're rising with inflation. The capital improvements on these aging buildings are pretty significant. A lot of the times, the association chooses not to raise the rates, even though they needed to, just to keep their HOA fee low. But that eats up reserves and it postpones capital improvements. So that then has an effect on insurance and recent capital expenditures going forward. And so condos really, before you buy a condo, make sure you understand the financials really well. Make sure you understand insurance for condos. It's a big, big challenge. All right, speaking of insurance, insurance is a big factor in California. California's largest home insurer, State Farm, was assessed $165 million by the FAIR Plan because of the January 2025 fires in Altadena and in Palisades. Okay, they were found to have wrongdoing. I'll let you read deeper into it. It's a pretty lengthy article and lengthy list of how they mistreated their policyholders. Now, the FAIR Plan enrollment, FAIR Plan is an insurer of last resort in California. When the prices are too high to go with your typical insurers, your private insurers, FAIR Plan was created as a stopgap to assist, but it doesn't come with liability, water, or theft. So it really was meant as just a stopgap. Now, but it's ended up functioning as one of the primary insurance markets in all of California, and in many zip codes, it's the only one. Enrollment in FAIR Plan topped 350,000 statewide. It's one of the largest residential insurers in California now. It is our state stopgap, backstop insurer. Okay, what typically will cost you $2,000 to $4,000 a year in a non-fire zone, in a fire zone or in a hillside or in a brush area, those homes right now are $5,000 to $15,000 just for insurance alone. What does this mean to you? Well, it means before you make an offer, reach out to your insurer, ask them what the policy will be in this area. I think it used to be something we did during closing. Hey, call the insurance, get the insurance bound. Now it's, hey, before we make an offer, let's find out how much insurance is going to be on this particular house. Very important. Okay. All right. Now let's talk a little bit about our neighborhood of the week here with our lovely Liana. And the neighborhood spotlight of this week is
West Hollywood.
Yes, it is.
Hello, everybody. Happy Friday, TGIF. Got some exciting weekend plans for us. Hope you do as well. And maybe we'll check out one of my recommendations today. Let's see. So starting off with the history of West Hollywood. So it's unlike any other 1.9 square mile radius in all of LA.
That's all it is?
Yeah. It's its own city. Yeah.
Yes.
Yeah. It has its own identity. Most exciting dining scene right now. It became a city in 1984. And before that, it was an unincorporated part of LA County. The drive from cityhood came from a very unlikely coalition. Actually, gay men and Russian Jewish immigrants, like our families, from the former Soviet Union, and seniors.
My parents weren't involved.
They were facing the expiration of LA County's rent control protections. So they got together, they organized, they voted, and they incorporated. So in that first city council in 1984, the majority of members were actually openly gay. And that's the first time in the United States where that has ever happened. And they enacted some of the strongest rent control right away in the country. And before that, it was already a very popular destination, of course, with the Whiskey A Go-Go, the Roxy, the Troubadour, definitely a very hippie, countercultural. And in the early civil rights movement as well, for the Group 1 was founded here in 1951, way ahead of Stonewall. So definitely all that's in the DNA. A lot of our family members personally started off in West Hollywood when they immigrated and then moved over to the Valley. And a lot of them are still there today. Actually, right now, so in that 1.9 mile radius, there's 35,000 residents. And out of those 35,000 residents, 40% of the residents identify as LGBTQ+. 11% of the city is from the former Soviet Union, a Russian-speaking community, mostly Jewish refugees.
Down from like 100%.
Yeah.
When we first moved here.
Who arrived in the 1970s, 80s. Yeah. And 15% senior. So still a lot of seniors there. And 70% of those are renters. So it's definitely, one of the strongest rent controlled areas in LA County. Of course, our landlord clients don't love that, but for renters, it's a great place to be. Now, for the exciting dining scene happening there, one of the biggest, most anticipated openings just happened this past weekend, Laurel Supply. Mm-hmm. If you could ever imagine that Erewhon got more fancy schmancy, there is now Laurel Supply on another level. It's the Laurel Hardware team, Dean McKillen and Phil Howard, the same group behind Laurel Hardware, and Isabel. We frequented that place a while ago. They opened up on the corner of Santa Monica and Olive, right next to Barney's Beanery. It's a high-end European-style market and dining concept. So organic smoothies, organic produce, hot bar. A lot of influencers are comparing it to Erewhon right now. I think it's winning. So definitely go out and check it out for yourself. It's very aesthetic in there for all my aesthetic girlies. Second restaurant opening, Sushi Samba. It's on a rooftop. I was actually fortunate enough to go with some of my girlfriends for their opening weekend. It's the brand's U.S. flagship return. So the globally recognized Japanese, Brazilian, Peruvian fusion-style restaurant. Locations in London, Dubai, Singapore, and Las Vegas. The West Hollywood is a multi-level restaurant. It's gorgeous. DJ on the rooftop, beautiful, bright orange decor. It's pricey. Can I say that it's worth it for the quality of the food? Still questionable.
You're not just going there for the food.
Yeah, it's definitely the experience. Unfortunately, a lot of times in LA, you have some things that outweigh the others. The experience is great, location is great, but food quality is not right there. I wouldn't say it was bad. A couple of the things were delicious. I would definitely suggest going there for just drinks and appetizers before your night out. But it's definitely beautiful and the vibe is great. And then another highly anticipated, Ronnie's Pronto. So this is actually inside of Kith, which is a clothing brand that also serves frozen yogurt that a lot of people love. So Ronnie Feig, the founder of Kith, expanded the Ronnie's restaurant concept. He debuted in London last year. And it's basically retail and street food. So you got matcha and breakfast and sandwiches and reimagined New York classics. So definitely a lot of fun stuff to check out. West Hollywood, guys. Yeah, while you shop. Yeah.
Interesting.
Yeah. And that's about it.
All right, awesome.
Thanks,
Thank you, Liana, for West Hollywood.
Yes.
Where many a Russian babushka and dedushka still live. All right. Lastly, let's get to our mortgage rates. And I briefly mentioned it already. Our rates have gone up. Okay. And so how far did they go up is what you're asking. And 2 weeks ago, when I did the update, we were at 6.44 on the 30-year fixed average. Hold on. Okay, here we go. We were at 6.44. We're now at 6.62. So we're up 18 basis points in 2 weeks. The 15-year fix went from 6.01 to 6.09, so 8 basis points. The 30-year jumbo jumped from 6.59 to 6.68, 9 basis points. And the FHA jumped significantly, 5.92 to 6.15. We're up 23 basis points on the FHA, and the VA up the same 23 basis points from 5.94 to 6.17%. All right. Our quote of the week. The four most dangerous words in investing are, this time it's different. Most dangerous words. Why? Because, well, in this situation, every Fed chair transition sparks the same narrative, okay? New person, new playbook. This time it's different. Data shows otherwise. Rates respond to inflation, oil, the bond market, the same forces decade after decade. So for those that think that, oh, this new Fed chair, that's it, or rates are going to drop to back to the fours, I wouldn't hold your breath, all right? This wonderful quote, the four most dangerous words in investing are, this time is different, by Sir John Templeton, American-British investor, mutual fund pioneer. He's the founder of the Templeton Growth Fund. All right, so this week's takeaway, new Fed chair started today. Rates hit an 8-month high. LA condo sales are at a 20-year low. California insurance just became a closing cost issue for every single LA buyer. Check it out beforehand. Don't predict the headlines. Price your deal honestly. Price it. Run the insurance numbers up front. Share this with anyone buying or selling right now. DM me for your free guide, free buyer guide. Okay, I've bought and sold hundreds of homes on both coasts at this point. I put the best of what I learned into a free buyer guide. DM me the word guide and I'll send it to you directly. If you like this video, please share it on social. Tap the share button, send it to your friends and family. Head over to Facebook or YouTube after this to see the rate table, the links, and the slides for today's content if you don't see it on your screen. And drop a comment. Are you locking? Are you waiting? Are you pivoting to the FHA VA this week and those rates? Drop a comment. Let me know what you're thinking. I read every single one. All right, this is Roman Shersher with your weekly buy, invest, sell update. New chair, same fundamentals. Prepared buyers win in volatility. See you next Friday. Actually, 2 Fridays from now. I'll see you in 2 weeks.